Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on the Charles Schwab Corporation, a leading provider of brokerage, banking, and financial advisory services. Schwab is known for its customer-centric approach and innovation in the financial services industry. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Charles Schwab has been a significant player in financial services for decades, particularly in the brokerage and investment management sectors. From a behavioral finance perspective, how do biases like the status quo bias and the anchoring effect influence their decision-making, especially in areas like customer engagement and investment products?
Status quo bias is particularly relevant to Schwab's approach, especially in how they design and offer investment products to their clients. Many investors have a natural preference to stick with what they know or what feels familiar, even when new options might offer better returns or lower risks. Schwab leverages this bias by offering a range of investment products that are straightforward and easy to understand, often encouraging clients to stay with proven strategies rather than chasing new, potentially riskier opportunities. This focus on simplicity and reliability helps Schwab build trust with its clients, reinforcing their preference for the status quo. The anchoring effect also plays a significant role, particularly in how Schwab sets pricing for its services and structures its investment offerings. For example, Schwab was one of the first companies to reduce trading commissions to zero, which set a new anchor in the industry for pricing expectations. This move not only attracted a significant number of new clients but also positioned Schwab as a leader in customer-friendly pricing, influencing how both existing and potential clients perceive the value of their services.
And this focus on reinforcing the status quo and using pricing strategies to set new industry standards has helped Schwab maintain its leadership position in financial services, appealing to both customers and investors who value stability and innovation.
Exactly. Schwab's strategic use of status quo bias in maintaining client relationships and the anchoring effect in pricing appeals to investors looking for a company that understands and leverages behavioral finance principles to enhance customer loyalty and market positioning. However, this approach also means that Schwab must carefully balance the need to innovate with the importance of maintaining client trust, particularly as the financial services landscape continues to evolve with new technologies and competitors.
Let's talk about diversity, equity, and inclusion at Charles Schwab. As a major financial services provider, DEI is particularly important for Schwab. How does this intersect with behavioral finance?
Schwab's approach to DEI is crucial, especially as the company operates in a highly competitive and customer-centric industry where diverse perspectives can drive better decision-making and client engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Schwab's ability to connect with a broad customer base by fostering a culture that values diversity and inclusion. A commitment to DEI allows Schwab to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in financial services. For investors, Schwab's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Schwab build stronger relationships with clients, employees, and communities, reinforcing its brand as one that values inclusivity and customer satisfaction.
Investors are increasingly considering DEI when evaluating companies, especially in financial services, where the ability to serve diverse populations and foster inclusivity is critical to long-term success.
That's right. By embedding DEI into their corporate culture and client engagement strategies, Schwab not only improves its ability to serve a broad range of customers but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Schwab operates primarily in the United States, but its influence extends to investors around the world. How does the company adapt to different market conditions, and what role does behavioral finance play in this?
Schwab's strategy involves tailoring its financial products and services to meet the specific needs and expectations of different client segments while maintaining its core focus on transparency, value, and customer service. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with serving a diverse client base. Schwab's ability to understand the financial behaviors and preferences of various customer groups allows it to design products that resonate with different investors, whether they're individual retail clients, institutional investors, or financial advisors. By leveraging insights from behavioral finance, Schwab can create offerings that are both competitive and aligned with customer needs, helping to mitigate risks associated with market fluctuations, regulatory changes, and evolving consumer expectations.
And this adaptability is essential for Schwab, especially as they face competition from both traditional financial institutions and new fintech companies. Their ability to maintain their brand's relevance and leadership in different market conditions is key to their continued success.
Exactly. Schwab's focus on understanding client behavior and adapting its strategies accordingly allows them to remain a dominant player in the financial services industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in market conditions, regulatory environments, and competitive pressures.
Now, let's compare Schwab to other companies in the financial services and brokerage sectors like Fidelity, Vanguard, and Trade. How do the behavioral finance dynamics differ?
Schwab's dynamics are often compared to other financial services giants like Fidelity, Vanguard, and Trade, particularly in their approach to customer engagement, investment products, and competition. Schwab's strength lies in its ability to combine traditional brokerage services with innovative financial products, appealing to investors looking for a company that balances stability with forward-thinking solutions. Fidelity, with its strong focus on active management and research, appeals to investors interested in a company that prioritizes deep market insights and personalized investment strategies. Vanguard, known for its leadership in low-cost index funds, attracts those looking for a company that emphasizes cost efficiency and long-term investing. Trade, with its focus on digital trading platforms and self-directed investing, appeals to investors interested in a company that leverages technology to empower individual investors. Schwab's behavioral finance dynamics are shaped by its reputation for customer service, strong client relationships, and adaptability, making it an attractive option for those seeking stability and growth in the financial services industry.
And unlike Vanguard, which focuses heavily on low-cost index funds, Schwab's strength lies in its comprehensive range of services that appeal to a wide variety of investors, offering a more diversified approach.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Schwab, the focus on customer-centric innovation, market adaptability, and financial strength provides a unique value proposition in the financial services industry.
To sum up, Schwab's approach to business is deeply influenced by behavioral finance principles, whether it's through their customer engagement strategies, market adaptability, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Schwab's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.
Thank you.